On today's episode, I'm joined by Hunt Demarest to discuss his top financial tips for shop owners. Hunt is accredited in business valuation and a certified public accountant that has been with Paar, Melis and Associates since 2006. So Hunt, welcome to the break room. Thank you so much for joining me. How are we doing today?
Pretty good. Thanks for having me on.
Yeah, of course. I'm really excited to dive into the conversation. Obviously, we're going to be talking about our financial tips for shop owners today. This is your area of expertise. I know you do a lot of work with auto repair shop owners and specifically advising in this type of topic. So I'm going to dive right in. Obviously, I've got a few questions for you today that we're gonna discuss. And the first one that I'm intrigued to know is, can you share some advice for any shop owners listening on how to go about budgeting for their shop? You know, how to create and maintain a budget.
Sure. So I think that the shop owners are a little bit different than some other businesses, or, even if you've never experienced other businesses, a lot of shop owners obviously have personal finances. So when I talk about budgeting for personal finances, we're generally talking about a situation where someone is working for someone else, right? And so when we've always been taught budgeting, it's your income is fixed, so you need to cut your expenses to make that budget work. Now, when we're talking for a repair shop or arguably a lot of businesses, it's kind of the opposite, right? Your rent is what it is. Your utilities are what they are. Your insurance is what it is. So you essentially have a cost of doing business in this location. Yeah, sure. Most of your expenses like parts and labor are variable, but once you have kind of that sunk cost and kind of, model of people in there, now all right, this business needs $30,000 a month. So when I talk about budgeting to shop owners, we are budgeting, but generally we're budgeting sales, right? And so if you're looking at your overhead and you say, all right, I have $30,000 in overhead, that's the gross profit that you need to hit. Now, if you hit that gross profit, if you see that, you should cover your expenses. Now, you want to make an extra $10,000 in profit. If your overhead's 30, you now add 10,000. Now your overhead at that point is 40,000. And now at 50% margin, you need $80,000 in sales. That number right there, if you're sitting here and you're a shop owner and you don't know, all right, what is my break even? What do I need on this? Then how could you ever budget? Because you don't even know if you're going to have a surplus to be able to afford anything until you can meet your basic needs, which is, your break even point.
Right. So, I mean, that first step is you need to know exactly what your expenses are, right? Before you can even start.
Well, and I will actually go a little bit further on that is, if you go back and you say, all right, we need $80,000, a lot of people know that, right? You need to start chopping that up even more. All right. If I go to my technicians and say, guys, our goal for the month is $80,000, I'm speaking a foreign language to them, right? They talk about hours. And so, going down through that and saying, all right, $80,000 in sales, 50/50 parts and labor, that's 40,000 in labor sales, divide that by my labor rate. All right, guys, now I have a goal for myself, which is $80,000. Now I've translated that to hours, and maybe it's 240, maybe it's 200 based on what your labor rate is. And now you can go with that budget or that sales target. You have a overall target for yourself. You can go and you can share that with your advisor, your manager for either sales or gross profit target. And then, like I said, translate that to the technicians of, hey, these are the hours we need to hit as a team, individually, weekly. And now you have everyone kind of on that common goal. If you're a shop owner and you say, we need to hit $80,000 and that's the only place that you've went, I've told the team, your job is to lead. Your job is to show them how they get to that goal. Beyond that, you're just hitting numbers or you're just throwing numbers out there. And if you're not getting met, then it's probably the reason why.
Right. And I mean, that's something we see in all businesses a lot, isn't there? Is that difficulty in communication to have, everybody on the team understand exactly what the goal is, why that goal is important and how to get there. So yeah, that's a very, very good point. And my next question, actually, it ties into it, but are there any kind of systems or tools that you recommend when it comes to tracking expenses and managing those kind of financial records? I mean, I'm sure there's lots out there, but what would be your recommendations?
Yeah, and so there's a couple options out there. I mean, as far as accounting goes, QuickBooks is really the only game in town. I mean, They have 99.9% market share United States. Canada, you guys have a little bit more zero than we see down the United States on it. But what I always tell people is, I get it. Some people like QuickBooks, some people hate it. It's just what it is. You can go and you can use Zero, you can use FreshBooks. There's a couple other options out there. Most of them are a similar price and they're just not honestly as good of a product. Some of them are cheaper and they're a cheaper product in every sense of the word. Yeah, I mean, whether you like it or not, Intuit's here to stay, and that's
Yeah.
probably who you're gonna be forced to use. I like it. I mean, I use it every single day. Is it perfect? No, but,
Yeah.
I think also some of the frustrations is like, hey, this is also still accounting software, right? It's at the end of the day always gonna have its quirks.
Yeah, and I mean, I actually use QuickBooks as well, so I'm familiar
Yeah.
with it, and it does the job. I find it very user friendly. But yes, at the end of the day, it's accounting tasks, which might not be everybody's most fun thing to do, but it works, right? It's effective. And what tips would you have? Because obviously, in this process, efficiency and accuracy are really very important. What tips would you have for kind of ensuring you maintain that accuracy and efficiency?
So on a larger scale of it, you have to be looking at the numbers, right? Even if you don't understand them, you're never gonna understand them if you never start looking at it. Yeah, and so a lot of people just have these blinders up a brick wall. I'm a technician. I'm not gonna understand these numbers. I'm not gonna look at it. Not only will it's a self-fulfilling prophecy. You will never understand if you never look at them. Your team knows that you don't look at them, and there's a lot of things that can go beyond that, right? Theft, embezzlement, and also just
Yeah.
overall mismanagement when they know someone's not looking at this stuff. I would say, honestly, the biggest piece, if you are like, hey, I got a bookkeeper, I look at QuickBooks a little bit, I'm just not a numbers person. You run your business on two sets of books, right? I'm talking directly to the shop owner. You have your shop management software that everyone in your shop runs off of, and then you have QuickBooks, which maybe you look at, but a lot of times no one's looking at that. Your shop management software is what you think you've received or what you think you paid for parts. QuickBooks is what actually went to bank account, what actually left the bank account. Those two should be speaking the same language and arguably pretty darn close. If they aren't, then you need to fix that before anything else. And a lot of times when I look at new clients, the biggest wake up call is, we get a financials. Let's say we're doing it now. So probably through August, 8 months of financials. And I've had this phone call hundreds of times. Hun, I'm not sure why we came and switched over to you. I said, why? What's going on? These are wrong. There's no way I'm making 20% margin on my parts. Look at TechMetric, look at Shopware. I'm making 50%. And sure enough, there's a difference. It's not wrong though. And I say, yeah, but you guys obviously aren't returning any of your cores, any of your warranties, because I don't see virtually any credits on here. There's parts that you guys are paying for in QuickBooks. I don't even see in your shop management software. And there's a lot of inventory that's leaking out because no one's looking at that. And so what these people have is a business that's not making any money. But the only difference is, well, if you're realizing the margins that you already think that you are, that's the problem right there. And if you don't kind of use those two systems as a check and balance, you'll never notice that.
Yeah, yeah, absolutely. So the next question I have for you, Hunt, is to do with profitability. So how would a shop owner analyze and improve their profitability on different services or different job types? What would that process look like?
So, I mean, I think at the highest level, you got to figure out, what your key numbers are, right? So before you kind of get granular on specific services, step back and see if there's an issue first and foremost. So if you're looking at your financials right now and you see your profit margin is 25%, probably safe to say you're blowing most things out of water. There is going to be things that you could tweak, but for repair shop, 25% profit margin is really good. Generally, the model that we look at, so if I'm looking at financials and kind of comparing it to what I would expect to see, what we generally run is around a 50% gross profit. So after paying parts, labor, service advisor, sublet, shop supplies, half your sales are left over. And then if your overhead is 30% or less of your sales, then that's going to leave you around 20% net income. And so if I'm looking at financials, that's kind of how I judge it. And I advise shop owners to do the same thing. So if I'm comparing my financials and I look at this and I'm saying, all right, I'm not making any money. First thing I'm going to compare is gross profit. All right, I should have 50% gross profit. I'm at 50% gross profit. Now, if I look and I see my overhead is 45% of my sales compared to we're shooting for 30%, then I look at that and I am thinking to myself, I'm probably pricing this stuff okay. I'm probably decently productive on this. I'm just not selling it enough, right? This is one of those examples of my overhead is just a little bit more expensive. Yeah, if this is my personal finance, I'm going to cut out the Starbucks. I'm going to cut out going out to eat. But this is what my business needs. So sales fix everything. I need to drive my sales. Now, if I look at this and say, yeah, my overhead is 30% of my sales, but so is my gross profit, then we look at that and say, well, overhead is fine, actually, but we are not profitable enough. And so that's when I start looking at this and saying, is it parts or is it labor, right? Addressing those issues on it. Parts are fairly simple, right? If you're not making enough money on parts, increase your parts matrix, now selling those, that's the harder part. Labor is the tricky thing, right? Because we're dealing with people, we're dealing with motivating people, we're dealing with all different types of pay structure on it. So we just came out with our benchmark report where we looked at all of this data for all of our clients, hundreds of shops around the country. The only one metric that had any correlation between profitability was productivity. The higher the productivity of the shop, the higher the profitability. Labor rates, total sales, amount of sales per technician, sales per advisor, none of that stuff had any relationship.
Wow.
If you have productive team members and you are getting a decent labor rate and you're not paying these guys a fortune, you can pretty much screw up everything else and you're going to make money. Like having a very efficient technician is that profitable where it can mask a lot of other mistakes. Now, the same flip side, if you have a shop that does very, very well and your technicians are 50% productive, unless you live in a place where it's very cheap to live, very cheap to operate, you're probably going to have a very, very tough time running that business.
Right, absolutely. Yeah. That almost opens up a whole another consideration. I was just thinking kind of when you were speaking there about the importance of productivity and having a motivated team and an engaged team. And it's well, I mean, it's not really crazy, I suppose that's the wrong word, but how taking the time to analyze your numbers in that particular way can really show you exactly what is going on in your business, but it's understanding what to look at, right? Which I think a lot of, small business owners, until they've got that experience or they have a consultant with somebody like you, maybe don't realize that actually if they spend a bit more time really looking at the financials, that they can really, get a good idea of what's going on in their business. Would you
Well, I
agree?
think the big thing on it is if you look at a business and you take the numbers out of it, you're getting opinions, right? Well, hey, what's wrong with my business? I think this, I think that, I think that, right? And they could be right, they could be wrong. And, depending who you're asking, you get a different answer. When I go to my clients, 80% of my clients have coaches, right? So they're actually getting, people that are telling them how to do these parts matrix, how to structure my pay plan. What I think the, fresh thing about looking at financials is, hey, I'm not telling you how to fix your productivity. I'm not telling you that that person is your problem in your business. These numbers don't lie. And this is a very easy conversation to have with the team because it's no longer opinions based. We can go out to the team and say, I have 3 guys in the building. So I paid you a combined 120 hours last week. You sold me 60 hours, right? There's no feelings, there's no emotions, guys. This is simple math.
Mm.
I'm paying you twice as many hours as you're paying me. We got to fix that equation. And that's what, I tell a lot of these guys is looking at these numbers and sticking close to the numbers, you can actually have a lot more effective conversations with your team. Because if you go to your team and say, guys, you're not productive, I need you guys to do more, then they come back and say, boss, we've done as much as we possibly can. If you don't have any numbers to back it up, it's like, all right, where do we go from here? First is a conversation of, guys, we're average for the last 5 weeks, 55 hours, right? Our new goal is 75 hours. We're going to have a visual target. We're going to hit it. We're going to talk about what we need to do to fix it. A lot of this stuff, honestly, from doing this as long as I have, the conversation usually takes care of half of these issues. Hey, boss, I didn't even notice that, right? I'm paid
Mm.
salary. I'm paid hourly. I don't even look at the hours. I'm busting my butt. I don't want to lose this job. I've worked here for 10 years. Now that I have a target, absolutely, we're going to hit it. And I've
Right.
seen a lot of shops, overnight hit these targets because when I talk to my clients, they're like, I'm not making my, numbers. We're not hitting the goals. I said, what is your goals? A lot of these guys know it. This much in sales, this much in GP, this much in hours, down the line. I said, what did the technicians say when you told them about those goals? Did they say those are realistic? I haven't talked to them about it yet. I'm like, So they're not meeting an imaginary goal that you've set out there, and so yeah, it's
Right.
sometimes people overthink this, right? It's like,
Yeah.
oh, employees ownership. It's like put yourself in their shoes, right?
Yeah.
How would you react? How would you know what that goal was and stuff like that?
Yeah. And I'm personally a very strong believer that the vast majority of people want to be successful in their work, right? They want to do a good job. Nobody likes feeling like they're failing or anything like that. So yes, having those conversations, using the data to back that up, because you can absolutely have scenarios where, you might show the numbers to a particular technician who, in their opinion, they are highly productive. But they don't realize the context, right? So yeah, that's a very, very good point. Again, it comes down to that communication and having everybody really on the same page. Yeah.
Yeah, and absolutely. And one of the things that people like to do with this is they use money, right? Flat rate, commission, spiffs for hitting certain goals. And yeah, that's an easy way to motivate someone that is money motivated. The trickier part is, there's a lot of people that are like, this is a good living, right? I'm not interested in making more money. I'm interested in quality of life. I'm interested in feeling like I'm part of a team. I'm interested in making sure that my boss appreciates me. And this is where people are like, this is hard, right? This is getting very emotional. This is getting in my feelings. I'd rather just say, hey, do as much work as you can. I'll pay you a ton of money. And we're seeing an industry that is kind of changing. When we did this benchmark, we looked at this stuff of our top shops. So the top 10% of our client base, 50-50, whether they were commission based or flat hourly and salary, right? There's going to be people that will say you cannot have a high production shop and not be flat rate. That's absolutely wrong. We have them, right? You can't pay all of your team salary and have a profitable shop. It can be done. So obviously the issue is not how you're paying these people, but probably the management and, delegation behind that.
Right. And I think it's also, knowing your team, because to your point, yes, different things motivate different people. Different things increase engagement in work. And I think unless you have that understanding, even on an individual basis, to be honest, you're probably missing some opportunity there.
Well, and it's hard, right? I mean,
Yeah.
what motivates people? I mean, that is a tricky part, and that's where it goes beyond the numbers, right? Productivity is very easy to calculate, very easy to identify on the financial statements. To fix it, I'm honest with everyone. Hey, this is the number one issues all shops have, big and small. It's also one of the hardest things to fix because you will need to get in someone else's head and figure out what makes them tick. Also, when you look at productivity, I've kind of been unfair to technicians here. A lot of people think I don't have a lack of productivity. You think I got a lazy technician, I got a technician that's not competent. When in reality, that's probably the smaller percentage of reasons. If you don't have cars, technicians can't be productive. If your service advisor can't sell the work, you can't be productive. If you don't have the proper equipment set up, you can't be productive. If you're dispatching the work, incorrectly to the wrong people, the wrong strong suits, you're not going to have good productivity. There's hundreds of different reasons behind, other than, hey, Johnny was out smoking cigarettes behind the shop and, not doing any work. But
Yeah.
yeah, when we talk about it, that's what we think is, well, laziness.
Well, that's the kind of easiest go-to, isn't it? I think is just think, oh, okay, so the problem is with the kind of the end of that line.
Especially the shop owners, the manager, service advisor, everything else, right? You're
Yeah.
looking at this and would come to a really stark realization a lot of people have of, hey, I might be the issue of my team's productivity,
Can
right?
be hard
I'm
to look
trying
in
to
the
wear
mirror
too many
sometimes.
hats.
Yeah.
Yeah, it sucks. No one likes that.
No, but it's important. I think it's
Yeah.
important that is done, because that's where you really are going to uncover those inefficiencies, right?
Yep.
It's actually our last question, but I'm sure there's going to be some conversation around it. What financial risks do you see kind of in your work in the auto repair industry, and how would you mitigate those risks? So what do you typically see?
So I guess we'll have to talk about internal and external risk, right? So if I'm talking about people losing money, lawsuits, audits, whatever, the most common statistically for a shop, any small business, is going to be internal. It's going to be embezzlement. Um, we see probably 3 to 4 as many cases of embezzlements as we do audits. So for every 3 or 4 cases where I had a bookkeeper, a service advisor, a sister, a husband, a brother steal money from my client. We get 4 or 5, and then we'll get one IRS audit. Yet
Wow.
everyone is terrified of the IRS. They have the best propaganda campaign out there that everyone thinks they're watching, or you guys have the, what is it called? Not IRS,
CRA.
CRA,
Yeah, I
right?
had to think then. Yeah.
Now, for those of you listening to this that are going to be in Canada, the bad news that you guys have, there's a little fun fact. The United States and Canada spend the exact same amount of money on the IRS or CRA. You guys have a tenth of the
I was going
population.
to say a
So,
lot less people.
yeah, United States, you have a lot
Yeah.
less. If you're listening to the United States, I'm not that worried about the IRS. The CRA, they're actually a little bit more clever from some of my friends north of the border here.
They're
So,
on the ball, I think. Yeah.
yeah,
Yeah.
no. We're still faxing stuff to the IRS down here. So, yeah, we're still in the dark ages.
I love that.
Yeah. So making sure that you have a handle on your finances. And like I said before, you might not be an expert. You need to be in it. You need to be asking questions, and you need to give the perception. Perception is reality. Fraud, embezzlement only happens when there's opportunity,
Mm.
right? And so if you don't give someone access to your bank accounts or QuickBooks or anything, how can they steal money from you? Now, every single situation that someone has been, stolen from or embezzled from, it's always been, Hunt, they would have never done that, right? I know
Mm.
Lucinda, she's like family to me. I trust her with everything. Well, of course you do. Those are the only people that can steal from you because those are the only people that have access. So trust but verify, separation of duties, right? Do not have the same person collecting money, depositing money that's also reconciling this. If you have someone that does wear multiple hats, try to change that around every once in a while. Get the same person doing all this stuff. Hey, in May, I'm going to do the bank rec, right? In October, I'm going to look at the vendor statement. I want them to know, hey, I know enough to be dangerous on this, and every once in a while, I'm going to jump in there. Half of these embezzlement cases happen when something like that goes on. Hey, Lucinda was sick, so I went over and I did the deposits for the day, and yeah, I noticed something that wasn't right. Um, if it's done correctly, this is very, very hard to catch. If someone's stealing 50 or $100 from you, I'm almost guarantee if they have half a brain, you'll never see it. Now, most of the time, it never stays that little. It gets big and big and bigger. But yeah, I mean, I've had cases, and these are not wealthy people. These are not millionaires this is happening to. These are regular people. I've had clients with, employees show up with $500,000 in cash in a paper box saying, I've been stealing from you. I thought I was going to get caught. You know, really, really crazy stuff that you truly would just never imagine.
Wow.
Last year, I had a sister stole 150 grand from her brother on this. Yeah, I mean, this is the kind of
That's
stuff
crazy.
that'll put you out of business.
Yeah.
Now, from a internal side of it, the biggest risk is probably going to be lawsuits or, like I said, the IRS or local tax agencies. Um, you guys up there have GST tax, right? Down here, most of the places, Hawaii kind of has GST tax, but everywhere else has sales tax. That is the most common area that we have issues from like a compliance standpoint.
Okay.
Most people are kind of on the up and up to a certain extent on taxes, right? Yeah, you might deduct stuff that you shouldn't be, but you're not going to see someone that, is understating their income by hundreds of thousands generally, right? I'm not going to prepare that return. Sales tax, though, a lot of people get creative on this stuff. A lot of people want to say that's not all, taxable, or maybe they just don't know what the proper rules are. If you have a question and it's the customer that's going to pay the sales tax or GST, charge it, collect it. Because if you ever an audit down the road, you can't go back and say, ooh, I should have been charging sales tax on my shop supplies and I wasn't. I can't go back and get it from the customers. It's going to be out of my pocket. So making sure that you're not messing around with that stuff, making sure that you keep an eye on the financials, and that's really all you can do. I mean, if you want to have a business where you are not the judge, jury, and executioner, you're going to have to delegate. And it's a huge leap of faith on it, and it shouldn't be taken lightly, but it also shouldn't be completely avoided just to say, well, I'm never going to have anyone do this stuff because I can't get robbed. I mean, it's always a risk out there. You just got to do your best to try and minimize it, I guess.
Right. And make those it's a calculated risk, right? And I mean, really what I'm hearing from you and all of these questions, the common theme is really that need to have a level of education when it comes to the financial side of the business. I'm actually recalling as we're chatting when I was doing my business degree, I remember an accounting professor, it was in an accounting class, and he said, listen, I know most of you probably are not going to enjoy this class. Some of you will, most of you won't. This is why it's necessary. If you are ever going to run a business, you need to have at least a basic understanding. You have to know enough to be able to identify if somebody is taking advantage of you, basically, because the people are out there that will do that. I mean, you kind of gave me the stats there, which is shocking, but it happens. Yeah.
Yeah, I mean, I teach a 4-hour class on fraud and embezzlement, and every time I, go somewhere to teach it, it's always sold out. So, like,
Yeah.
this is going on, and the scarier part about it is generally in small businesses, the statistic I saw, only 20% of fraud is caught, right? So, like, if I have a room of 100 people I'm teaching to and say, by a show of hands, how many people have been, stolen or embezzled from, and 20 people raise their hand, then that means statistically that entire room has been a victim of fraud, yet only 1 out of 5 have actually been able to catch it because either it was a one-time thing or it just never passed the threshold where someone noticed it. And a lot of times, and there's going to be people that are listening to this, a lot of times, when we catch fraud, we don't really even catch it. We know it's going on. We know something is going on. And sometimes when that person leaves, you can even identify it. Like your parts manager was doing something there, right? But we still can't put our finger on it, right? And I
Right.
have done this for years. I've done thousands of hours. And even me as a professional, if embezzlement is done right, I can sense it, I can smell it, I can kind of narrow it down. But to a large degree, it's like something went on there in parts. What it was, we might never know. But that person's gone, the issue is gone. We can probably safe to say that there's probably some connection between the two.
Yeah, absolutely. But I mean, if it is that hard to really identify and prove, that there's no comeback. You just kind of have to accept your losses, right? So probably better to prevent than cure is what I'm thinking.
Yeah, if you're catching fraud or embezzlement on your financial statement, it's way too late.
Yeah.
And so the whole idea that we talk about fraud and embezzlement is we are doing process and procedures, we are separating the duties, we're having checks and balances to hopefully never allow someone to get into a position where they can commit fraud because we know it's extremely hard to catch. So we need to try and make sure that there's only a couple areas of opportunity. So minimizing your weak areas, statistically will make you less likely to commit fraud. And also the big thing is when this stuff happens, it's usually my clients that are loud and proud. Numbers are for Hunt. I don't look at numbers, right? They're boring. I have much better things to do. Your team hears that. Your team knows that, right? If you go back to your team and say, hey, in a shop where we have a brake rotor that should be out here, I don't see it anywhere, right? They're gonna be like, ooh, how did you know that, right? Like that is such a small, obscure thing, right? Throwing out little tidbits like that, just to make sure everyone's getting held accountable. And you might think, well, why do I care? It's right. It's $50 brake rotor. You lose a $50 brake rotor once a week for the entire year. I mean,
It
that's
mounts up.
$2,000-$3,000. If you lose a part, you have to sell that part 2 more times just to make back your money. So,
Yeah.
theft is a real issue.
Yeah.
Some businesses are aware of that and a lot more, kind of clamp down. But I think a lot of shop owners can kind of get a little bit loose with some of this stuff, and it's eroding some profitability.
Yeah, absolutely. I'm sure it's easy for processes and things to slip. And then if you do have somebody like that on your team, once they get away with something once, it's probably going to escalate as well. I'm sure you see that. It just gets worse and worse because people get greedy, right? So yeah, very interesting, very interesting. And I mean, we're almost getting up to wrapping up time, but I do want to kind of throw this out there. Is there anything that we haven't spoken about? Any other kind of specific tips that you would have for shop owners that are listening, or anything else you wanted to discuss?
So I feel like that this is like a public access commercial where I'm just trying to make sure shop owners feel that financials are important, right?
Yeah.
I'm never going to say it's interesting, right? Because everyone says, well, that's such a boring job. I'm like, if you think my job is entering tax returns and spreadsheets, and some of it is, yeah, that part is boring, right? I'm not that big of a weirdo where I enjoy making spreadsheets, but numbers allow me to have conversations. Like numbers allow me to educate the shop owners on a lot of times just what their own numbers are saying. So, a lot of people is like, oh, it's Greek to me, right? Numbers are almost a different language, and I'm trying to translate it. Now, once you are fluent in this stuff, you don't need a translator. You can look at this stuff and you can make your own decisions. But the biggest thing on this is not starting anywhere and really not having your financial set up correctly. A lot of people have the interest. Virtually everyone has the ability. This is accounting 101. But a lot of times when I get new clients on there, I look at their books. We got credit cards on there that they haven't had for 5 years. We got negative numbers. We have a loan that they paid off long ago on there. And they're looking at it and they're like, none of this makes sense. And I'm like, of course it doesn't. This barely makes sense to me. And I look at this all day, every day. And honestly, a lot of times when I clean this stuff up, we make sure it's matching the shop management software. We make sure the chart of accounts is really in order. A lot of people are like, oh, okay, yeah, I do understand this, because now it looks like what they're seeing in the day-to-day.
Right.
Once you can make that connection of, all right, I see the guys struggling. I see the guys having those comebacks and kind of getting hit in the chin. And now I see this on the profit and loss statement. That stuff starts to click. And you realize these numbers aren't foreign. These numbers are exactly what this business is doing, right? This is the paper trail of everyone moving around, money coming in and out. And yeah, I mean, that's kind of all of our world right now is data, right? Facebook wants your data. Google wants your data. The benchmark that we give out that everyone loves, it's all data. Your numbers are your data as well. You can have a great business if you never look at your numbers. Some of that is chance and some of that is going to be skill. If you want to have a great business, if you want to get the last bit of profitability out of it, virtually impossible to do without the numbers. So the big idea here is, the devil is in the detail, and making sure that you are looking at the smaller numbers and caring about those is probably going to be the key for any late stage business. And how are you going to see the 1% and 2% increase, decrease on there if you're not looking at the numbers, if you're not looking at the reports?
Yeah. Oh, absolutely. Absolutely. So really learn how to interpret the language of numbers. And if you don't know how, find somebody like Hunt to help you. Right? Yeah.
Education. There is a ton of great resources out there, right? We live in an information age. There is someone that has videos to walk you down through. There's professionals like myself. I always tell people, I'm not a big, huge sales guy on this. If you have an account, you like them, you trust them, you can pick up the phone and ask them a question. I don't think that you should switch, right? An accountant is a relationship and you need to have that level of trust. But if you don't understand your financials, if you don't understand your numbers and your accountant's not willing to help you on it, then you need to find someone else.
That's a very, very good point. Yeah. And on that, as we kind of wrap up here, if anyone listening does want to reach out to you, how would they go about doing that? What's the best way that they can reach you?
Yeah, so the best way to, access free resources, also contact us or anything else is on our website. We'll put the link here in the show notes on there so that you can fill out a little form and we'll reach out and learn how we can help.
Perfect. And you also, and I can't finish without mentioning this because I know you also have a podcast on this topic. So give a quick shout out to your podcast and where people could find it if they want to tune in.
So podcast is called Business by the Numbers. So weekly podcast, been going on about 2.5 years now. So cover weekly topics from anything from handling, the accounting of warranty work to interest rates to inflation and everything else in between. So check it out. It's available on iTunes, Spotify, everything. If you want to see something on there covered, shoot me an email and would be happy to discuss. Always looking for ideas.
Love that. Thank you. Well, Hunt, thank you very much for your time today. I really appreciate it. I've learned a lot. You've actually got me thinking that I need to go and dig more into the numbers in my business. So thanks for that. I'm kind of panicking here a little bit. But yes, thank you for sharing your expertise and taking the time to be a guest on The Break Room. It was great chatting with you. Thank you for watching this episode of The Break Room, driven by Shop Pros. To learn more about what Shop Pros can do for your business, check out shoppros.com. If you like this episode, please leave us a comment or a review, and don't forget to hit that subscribe button so you never miss an episode. The Break Room, where great automotive minds meet.